see all these media companies just like becoming merged with other tech companies. You know what I mean? Like just recently, we had what was it, like Sprint merged with T-Mobile. It was like the weirdest thing ever, dude. You know?
It's also interesting too, seeing all the Web3 companies emerging just to handle the new communication channels, like
Yeah,
manage Discord plus Telegram plus Twitter, like because CRM for business development is purely through those channels, which is so weird, right? Web2 is
yeah.
like email is the standard, maybe LinkedIn, but like, what is this world of crypto that's like, yeah, we use Telegram? Like, what?
Yeah, man. So, all right. Yeah, I guess we'll get started, Mr. Producer. If there's like a timer on this thing, I'll start in 5 seconds. Five, four, three, two, one. Welcome, ladies and gentlemen, to another edition of Crypto World Radio. My name is Wabi. I'm here joined by our special guest. We have Shade Protocol. They're right here as co-host, and as always, every Tuesday and Thursday, Dow Chemist is going to join us on the board as part of our speaker panel, and we're also joined. Right, good friend, a good personal friend of mine, and also my partner in this industry, Feel Pain. And we're also joined by one of the members from the Neutron team, and also a fairly consistent participant in some of these Cosmos-based panels, Soy. So I want to welcome you all. And again, if you guys enjoy content like this in the audience, feel free to retweet the space so we can get more people joining in on the conversation and discovering some hidden alpha on these projects, right? So in this AMA, you're going to find out what Shade is all about and some of the technical and non-technical stuff of the show. And at any moment, if you have any questions or anything, feel free to come up, give any statements, ask any questions, or just drop anything in the comment box at the bottom right. And if you're not able to stay throughout the entire show, this recording will be uploaded onto our YouTube channel as per our other shows. And yeah, we'll get started on the show. How is everyone today? The individual behind Shade Protocol. How are you doing today, my brother? Good to have you up here, man.
Doing good, doing good. Carter Wetzel here. Yeah, we are on the verge of launching a vision that we've been spending the last year and a half on. So the excitement is peaking all of this quiet development work through the Brutal Bear, through Luna, through FTX, through USDC, all the various, you know, milestone problems that crypto has faced in 2022 and 2023. And so to be on the verge of shipping this privacy preserving DeFi suite, this very, very bold vision, just super excited to share with you about it today.
Awesome, man. And then on to our other speakers. Dow, Payne, how are you guys doing today?
Doing great, man. Looking
Doing
forward
good,
to this
man.
conversation. It's been a busy week as always in crypto, so it feels good to talk to the builders and deep dive into what they're building. So that's always to me that's the best part of the week. You get to hear from the builders.
Hey, how are you today, brother?
Doing good, man. Sorry, I just walked in the door. But yeah, I'm excited to talk to Shade. I think they're building some pretty cool things.
All right, and Soy, how are you doing, brother?
I am good, mate. Sorry about that. I was just on mute. Yeah. Good day today, man. We had Astroport launch on Neutron on our testnet today. So
I saw that,
been a
man.
busy day.
Congrats, brother.
Yeah, really excited about that. Really cool decks and like a really nice sort of premier DApp to launch. You know, so really cool, really happy, and yeah, glad to be on the show.
Awesome, man. Good to have you here. So we'll have Joe and Timmy possibly join us later. So without further ado, so what's Shade Protocol all about, and what made you guys start building on top of Tindermint more than anything, brother?
100%. So I feel like, as with a lot of protocols, it starts with a story of and discovering a problem, and then getting a group of people together that are inspired to go build the solution. So for me, my journey started in 2017 on Ethereum, exploring all the different ICOs, exploring all the different novel DeFi primitives that were emerging and exciting, like Uniswap and MakerDAO. So I spent 3 years writing and researching a book called Building Confidence in Blockchain. And during that 3-year journey, it became super apparent that DeFi was completely transparent, completely exposed. You had copycat trading happening on Ethereum where people were following the most popular whale addresses, copying their trades, copying their investments. On MakerDAO and the various lending products, you had people, shifting Oracle prices to cause cascading liquidations and guaranteed profit. On the miner extractable MEV front, you had these very powerful programmatic actors emerging that could look at an incoming block, modify the ordering of transactions in a way that would extract value from an average person on Uniswap that's just trying to make a trade. And so, looking at these markets, information is valuable, right? Markets are just the exchanges of information, and so if information leakage represents a loss of value, and we all intuitively understand that, then it stands to reason that transparent DeFi has some very inherent inefficiencies in it. And so I started looking around and I asked myself, where is privacy preserving DeFi? Where is the late game place where you can build DeFi, have compliance frameworks on top of private smart contracts, and where is that ecosystem? And so uncovered at the time a layer 2 called Enigma, which is trying to do privacy with the MPC route on Ethereum. And eventually the community had some problems with the tech stack, had some problems with the SEC at the time during the ICO mania. And eventually it became a totally kind of community run project. It migrated to the Cosmos, shifted tech stacks. It became known as Secret Network, and I actually helped write the Secret Network white paper working with Secret Labs, the protocol team. And so initially, it was just a heart for where is the tech stack that can enable this vision and these primitives with economic security. And then around 2021, after Secret Network had existed for about a year, the Shade team started to come together. We had this itch to not just be a part of the validator infrastructure, be part of the story of the L1, but to actually go and build the apps that would prove the privacy preserving DeFi thesis. And so we pulled a team together that is now 15 to 20 strong, and we set out to do something that's very bold. At the time, and I still think it continues to this day, people keep launching DeFi primitive after DeFi primitive, and every new primitive has a new token. And we said, what if we could build a holistic suite of DeFi apps, and all of the fee streams go back to the DAO, and all of them are kind of self-referential. So you keep adding on these building blocks, and the set of primitives would become more and more powerful. And so we asked ourselves, what are the most important DeFi primitives? And the initial 4 that really stick out to us are bridging, trading, lending, and stable coins. Those are kind of the 4 DeFi primitives from 2017 to late 2021-ish that have proven to be the building blocks of crypto and DeFi. And so we began to develop Silk, which is like one of the world's first privacy preserving stable coins. It's over collateralized. One of the world's first privacy preserving lending products. So your liquidation price points are kept totally protected. Set out to build ShadeSwap, which is a totally front-running resistant decentralized exchange that's going to be featuring a stable swap, constant product market making, as well as a really unique and differentiated derivative swap pool. And then we're also built and launched a generalized IBC interface that launched at the end of December. That's going to be focused on onboarding Ethereum liquidity, onboarding IBC liquidity. And that's where we stand today. But what comes next after we launch these next 3 key primitives is what maybe we'll be able to dive into later on, but we'll start here. That was a mouthful to give you. And that's Shade Protocol. We're private DeFi.
No problem, man. So, could you elaborate on how Shade Protocol plans to unite all the decentralized stablecoins within the Cosmos and the benefits that will bring to users?
Absolutely. So, I think Cosmos was very intertwined with the story of UST. UST at its peak was massive, and the majority of decentralized stablecoin liquidity on Osmosis, I think it was the largest pair, second largest pair between Luna and UST was UST, right? And so when that collapse happened in the summer of 2022, it left a massive vacuum of liquidity. A lot of people, a lot of venture capital also kind of pulled themselves out of the Cosmos ecosystem to a degree after UST happened. And then there was essentially this race to fill that vacuum. Markets are very intelligent, and when there's a supply and demand mismatch, something's going to step up to fill that void and solve it. So Axelar USDC was kind of the initial solution that's emerged in the Cosmos, was to bridge over USDC as a stable coin. But Cosmos as ethos understands the importance of self-custody, right? We saw what happened with USDC. We saw that there's, real tangible risks. Something even as powerful as USDC with its brand doesn't necessarily have the guarantees that we've all come to know and expect in this world of immutable and over-collateralized DeFi. And so what we're seeing now is a bunch of decentralized stablecoins emerge. You have IST with Agoric, you have USK with Kajira, you have CMST with Comdex, you have Silk from Shade Protocol. I think there's other ones I'm sure I'm missing that are probably being stealth built as we speak. And so Shade Protocol wants to have a very focused stable swap on these decentralized stablecoins. And it's really, really going to be a point of focus. We've already talked with the various decentralized protocols. There's going to be incentives coming. At this point, we have five partners that are confirmed to be bringing external incentives to the stable swap and to Shade Swap. And the launch dates for the DEX are coming out tomorrow on our dev live stream. But we believe it's extremely important that Cosmos doesn't lose track of its identity, which is, decentralized collateral, a true decentralized story. And we believe that Shade Swap will be able to facilitate, deep liquidity and a focal point for Cosmos DeFi.
Awesome, man. You know what? That brings me to a two-part question, actually, man. We're getting into some deep alpha here, man. And I know you guys have been announcing some of your stuff, and the UIX is absolutely brilliant. So about Shade Swap, would you be able to explain some of Shade Swap's capital efficient curves that are going to reduce slippage and create a more efficient experience for stable trading? And another part to that would be, how does Shade Protocol plan to balance user privacy and transparency in the ecosystem, particularly with something cool that I find interesting with your privacy wrapper feature?
100%. So we'll start with the capital efficiency. So back in February of 2022, we set out on a bold vision to create something called asymmetric concentrated liquidity. To date, if you're familiar with Curve or even the Osmosis stable swap, liquidity is equally distributed along the curve. It's perfectly symmetrical. But this actually, there's situations where this actually isn't optimal. An example of this is actually derivatives. So if you're aware of staking derivatives like Stride, Quicksilver, and Persistence, these assets tend to trade in a very specific region below the minting price. It's actually what I would call it's biased one-directional order flow. And so it's actually significantly more capital efficient not to symmetrically place all of your liquidity along the curve. It's better actually to concentrate it at a focal point below the equilibrium. And so a curve, this curve has literally never been done in DeFi. We had multiple PhD folks working on this for multiple months. And the example we like to give is with 1 million in liquidity on, say, like Atom to ST Atom pool, you could trade 10% of the pool from ST Atom to Atom and only incurs 0.13% slippage. So this is about 10x more efficient than a symmetrical concentrated liquidity when you're going from derivative to L1. So this is orders of magnitude more powerful, more capital efficient. Liquidity providers are going to love it because it actually optimally concentrates their liquidity where trades are happening. And derivative users are going to love it because they're going to be able to seamlessly exit and enter their favorite L1 assets. So yeah, ShadeSwap overall is hyper focused on staking derivatives. I think the last year and a half of Cosmos, when we look at DEXs, all of them have been emitting a crazy amount of value. Specifically, I guess we can say Osmosis here. because you have to pay liquidity providers for the opportunity cost of not staking, right? So if I can earn 20% yield, just make a fictitious example. If I could earn 20% yield by staking Atom, in order for me to liquidity provide, you need to be able to offer me an APR, greater than 20%, and it has to account for impermanence loss, right? And so we've had all these dexes not using staking derivatives, and for ShadeSwap, I think all of Cosmos dexes are going to head in this direction, but we're hyper focused from day one. All of our base pairings are focused on staking derivatives, so it's significantly more capital efficient and economically efficient for the entire DEX because we're not going to be emitting value towards liquidity providers. Instead, we're just going to be tapping into the layer ones and the staking APR via the staking derivatives. So that's a lot to digest. So I'll pause there if you have any questions on that part.
No problem, man. If you want to go into the stable coin that you guys are building, Silk, if you want to go into like the backing of it and all that stuff, collateralized or non-collateralized, all that stuff. And then after that, we'll pass it over to Dow and Payne, brother.
100%. So Silk is super unique. To date, everyone's been pegging over collateralized stable coins to the US dollar. And so when we set out to build Silk, it was actually, at the time UST was alive and well. And so we were kind of benchmarking and kind of looking at the UST community and asking ourselves, like, how can we improve on UST? And there was really two things that really stuck out to us. Three in hindsight. The first piece is privacy. The second piece is, what if you had a stable coin that tracked a basket of global currencies and commodities, right? So you have your Oracle price feeds. All of the stability mechanisms are referencing essentially an aggregate of these different assets, currencies, and commodities being tracked. You could end up with this currency that was more stable and had less volatility than the US dollar. So that's what Silk is. It's tracking 6 different assets. It's tracking gold, the US dollar, the Canadian dollar, the euro, the yen, and Bitcoin. And there's different weights tied to each of the different assets in the basket. And then Silk itself is over collateralized with L1 assets you're probably familiar with, such as Atom, such as Secret, ETH, BTC. It's going to be an over collateralized stable coin coming out in April, and it's going to be the centerpiece of ShadeSwap liquidity alongside those staking derivatives.
All right, we'll pass it over to Dow. Thank you so much, Carter. Thank you, brother. This conversation has been lovely, man. And for those of you in the audience that are enjoying this content, feel free to follow us here at Because Bitcoin and share the space. Again, we are here with Shade Protocol, and we're talking all things privacy on DeFi and seeing what they're building alongside Secret Network on top of Tendermint. Some really cool tech going on here, and really something that actually separates themselves from the rest of the trash in the crypto ecosystem. I get up here and I interview a variety of protocols, and the truth of the matter is that you have hundreds or perhaps even thousands of protocols that are trying to just try to be Monero on DeFi, and some of those products just fade out into the distance. But this team comes all the way back from Ethereum, back on Enigma. And I vaguely remember that time period back in 2018, 2019, when privacy on Ethereum first started becoming a thing. And now they're bridging over to the interchange. So you're going to have this become a trend, especially with what's going on around the world with regulations and all of those things. But it doesn't even have to deal with that. Some people just would rather handle their business to themselves and all of those things. So truly a grateful opportunity. We're getting into the nitty gritty of things. So without further ado, Dow, if you have any statements you want to give, any questions, feel free to do so, and then we'll bring it on over to Payne.
Yeah, great presentation, by the way. Loving to learn about the concentrated liquidity and the stable coin that you guys are working on. It seems like, the way I understand it, you guys are looking at all the core primitive in DeFi and adding that privacy preserving layer on top of them, which makes sense. So it makes so much sense that I kind of asked myself, like, how come we haven't had more of an emphasis on secrecy or at least privacy preserving type of technology, it seems weird. Like I personally, I've entered the space like in 2017, and there was already plenty of talk about the need for at least privacy, right? So like no one has to know your wallet and see all your transactions. In your opinion, like why do you think that hasn't taken off, and what would be the catalyst to really get that conversation around privacy regain more dominance and people realizing that this is really important for the space to grow in general?
That's an extremely well pointed question. So first off, I'll just say thank you. It's a very intelligent observation, and I'd love to answer it. So, when I think about like why privacy in DeFi hasn't taken off, I think part of it's a bit of like a history perspective. Prior to 2021, 2020, late 2020, early 2021, everything was like UTXO based models. Essentially, like the purpose was solely on transactional privacy. And so I think as DeFi has matured, people have come to realize what's the value of a given token, right? It has to be its utility, and it also has to be kind of fee streams that are feeding back into the token itself. So I think a lot of these private transactional tokens, they didn't really have a focus on any particular tokenomics model outside of being scarce, right? And whenever that's your model, it tends to be a power law distribution where it's essentially like of 100 projects, 10 are going to be probably very successful, 10 are going to be barely successful, and the other 80 are going to die, right? And so I think we've seen the kind of power law distribution have its way on the transactional privacy side, with the Moneros of the world, the Dashes of the world, right? But up until 2021, it was just transactional privacy, and like the total addressable market for that is far, far, far smaller than the total addressable market for DeFi primitives. And so my answer to your question would be, there hasn't been a place where you can build privacy preserving DeFi with smart contracts. That literally was not a thing. Secret Network was the first to do it with private smart contracts. Now we're starting to see it a little bit with Oasis. Now we're just starting to see it a little bit with Darrow. But as a whole, builders it didn't exist. The tech stack didn't exist. So Shade, I think the reason we're just far ahead of the curve is like we're some of the first to do it. We were obsessed with this vision, way back 4 or 5 years ago. And so the front end tooling to be able to build websites on top of this technology, the smart contract tooling to actually be able to sustainably and safely build it, all of that's matured in the last year and a half. And now we're finally arriving in 2023, and now we'll find out what happens when you actually have primitives and applications that have an excellent user experience, have solid liquidity, and can essentially compete with non-private apps in terms of the offering. How many people will come to that? How strong is the product market fit going to be? We don't know, but that's part of the journey. We have that vision, we have that dream, and now it's time to find out.
Yeah, I love that answer. And you emphasis on product market fit, I think, is exactly what I had in mind. Is if you can provide the exact, or maybe not exact, but a similar experience with the added layer of privacy, it just makes sense that most users will go that direction.
I kind of think of it like HTTPS on the internet, right? Like now you use a website that's like HTTP, and you're like, that doesn't feel great, right? Like you like seeing that little lock symbol. And I think DeFi in a similar sense, like 10 years from now, people are going to look back and be like, why did we think we could onboard institutions and regular commerce without some degree of financial privacy? And I'll say this, total transparency is a feature, right? There's value to total transparency. And so what I like to say is the end state for DeFi and crypto is transparency for public goods, privacy for individuals. That is what we should be aspiring for.
Payne, if you want to follow it up, feel free to do so, man.
Yeah, for sure, man. I'll just go ahead and ask, like, what's the roadmap for Shade Protocol's integration with other chains and ecosystems outside of Cosmos? And, like, how do y'all plan to approach that?
100%. So I think there's, I don't know, I think there's like kind of 3 categories to think about. So you have IBC integrations, you have EVM integrations, and then you kind of have non-EVM, non-IBC integrations. On the EVM front, that's pretty straightforward. There's multiple bridges that connect EVM liquidity to the Cosmos in terms of Axelar and Gravity as two really key bridges. I personally trust Axelar quite a bit. Eventually, what I'm hoping for is that instead of having to trust bridges, we'll have like EVM light client module in the Cosmos where you just be going directly from an EVM chain directly to the layer one that you want to move your assets to, right? You don't have to trust some sort of massive proof of stake custodian as your intermediary. We've seen how many times that's gone bad, right? But those do exist, right? There's two bridges, XR, Gravity. That's how you can get EVM liquidity onto Secret Network, into the Shade Protocol DeFi ecosystem starting, in April once all these primitives go live. IBC is super easy to onboard. It's like the biggest strength of Cosmos, arguably one of its weaknesses, but that's its own little philosophical discussion, is that, you spin up a new Cosmos chain and you instantly have access to all of the other assets all throughout the Cosmos, assuming you have relayers that connect your chain to everyone else's. So IBC is great. We love IBC. And then non-EVM, non-IBC, I'll be honest, that's definitely not the forefront of the roadmap for Secret Network, to my knowledge. I suppose that would be like connecting to like probably like a Near protocol or a Polkadot type of a deal. But my gut instinct says that IBC is being proven to be such a mature and strong protocol with a lot of security guarantees that I wouldn't be surprised if a lot of these external ecosystems decide to integrate IBC to instantly be connected to the 100 plus blockchains, and that number is rapidly growing in terms of the IBC ecosystem.
Sweet, thanks. And yeah, that's pretty cool. I agree that if you just have EVM and IBC, you'll probably be good. I mean, those are probably the two. EVM was the most important one that I was curious about outside of IBC. But also, so like with the rise of DeFi and the increasing number of DeFi protocols just in the market in general, like how do y'all plan to differentiate yourself and attract users like outside of people who just want to be private?
100%. So this is maybe where I give some alpha here that's fresh off the blocks. Probably shouldn't. My marketing guy probably won't. Okay, I'll do it anyways because it's products are coming. This stuff is going to be public soon enough. So, we viewed phase one of Shade Protocol as the key primitives, right? But there's hundreds of lending products out there, right? There's hundreds of stable coins, and so sure, we unified them, and the UI UX is going to be phenomenal. The tokenomics is going to be phenomenal, right? Like all that, yada yada yada. But the next phase that's coming after this is actually what this is all has been about. So the goal of Shade Swap, separate from all this privacy preserving DeFi, was to bootstrap liquidity for Silk, the super uniquely differentiated kind of 4x instrument. You can hold it, be hedged against global volatility, be hedged against inflation. It's not the US dollar and you totally own it. But we want to take it one step further. You see, there's an industry, it's the largest market in the world, and Web3, for whatever reason, has not gone after it. And that market is 4x markets. It's if you account for the derivatives market, the 4x market, it's literally hundreds of trillions of dollars. And it's interesting because I think a lot of us arrived to Bitcoin and we heard like cheaper remittance fees in crypto. And so these assets are better for moving value around. But one thing we're extremely interested in is massively expanding accessibility to 4x markets. And so Silk is essentially going to be the gateway to a 4x perps market. So if you're familiar with GMX, if you're familiar with DYDX, the next big phase of the roadmap, all of these baseline primitives were to set the stage for being able to use Silk as collateral to be able to go leverage long, leverage short, thousands of X against the euro, against the US dollar, against the yen, against the ruble, against gold. And no one in crypto has really gone after 4x markets. And for us, all of this work to date is a prelude to going after the biggest market in the world.
Have y'all, my follow up to that is, have y'all ran into any like regulatory issues with that? Have you noticed that people have been like hesitant for that? Because I feel like that's just a very obvious market that obviously no one has tapped, but I'm wondering if that's like for a reason, in the sense of like, have you guys noticed that it's been a headache as far as, like where you want to operate, like can't advertise in the US, or you're like a protocol that's, selling derivatives that you might need something for some kind of license? What's the experience been with that?
100%. So it's an interesting thing because that has been the first reaction when people hear, wait a second, like why has no one in Web3 gone after Forex markets? Why is that? Um, Personally, I think it has to do with the fact that perpetual swaps as a product are the perfect way to enter into the Forex markets without needing significant liquidity, right? Because with futures and options, no one's going to do that in Web3, right? Like they're such illiquid instruments. It's really difficult to bootstrap a futures and options market. But perpetual swaps, GMX and DYDX kind of unwittingly, unknowingly prove that you can build out these very interesting ways of like financial expression without needing an insane amount of liquidity to attract folks. It's by nature of how perps market works. So I guess I would, before I reference the regulatory front, I would just say I think the perpetual swap was the prelude to this. I don't think we're going to be the only ones doing this. This type of like concept and idea is valuable enough that I would say give it 2 years and you're going to be hearing more about Forex and perps market. You heard it here first. But on the regulatory front, completely agree. To pull off this type of product, you have to be completely open source on the front end, completely open source on the smart contract side of things. You need to be able to prove that you're not, that the baseline governance token undergirding all of this isn't a security, that you can point to, 10 plus different teams, that it's a globally distributed team. And so fortunately for Shade Protocol, we've been very focused on that from day one. I won't lie to you, though. Many people would look at this type of project with the privacy and already say we're engaging in regulatory arbitrage, and sometimes that's just the cost of innovation, I suppose.
Yeah, I agree. Kind of just keep making it until see what happens. So I'm pretty excited about what you guys are building. But yeah, I had a couple more questions. So could you explain like the benefits of the Shade Bridge for users, and like how does it compare to other bridges that like other protocols have offered?
100%. So the primary advantages of the Shade Bridge is it's just a front end built on top of IBC, which in and of itself is actually very difficult to pull off. So most apps that you go to, they'll like Osmosis, for instance, there's like a deposit and withdraw button. Like your only options are, I'm coming from some other IBC chain, I can deposit just to Osmosis and I can withdraw from Osmosis. But we built a generalized IBC bridge, which means from our interface, you can bridge between any of the IBC chains with any asset from that given chain. So it's a totally generalized bridge, and that UI UX just has a lot more fluidity than anything else on the market right now in IBC just for bridging. So we built it totally as a public good. There's no value accrual. There's no extra fees. We just view it as a public good because every user story starts with that bridging experience in this world of fractured liquidity. And so we just wanted to make that as seamless as possible.
Sweet, thanks, man. And then, yeah, what kind of like I wanted to ask about the governance too. So, what kind of governance model are you guys going to use, and like how will it ensure that Silk Stable and other stable coins in the ecosystem are like governed transparently and efficiently?
Yeah, it's a great question. So a lot of the key macro public good statistics, like treasuries and certain like macro variables on over collateralization, the viewing keys to view this encrypted information are completely publicly visible. So the community is going to be able to, go to the dashboard and see all the macro statistics that you'd be used to with a public protocol. In terms of governance, we're not, because Shade Protocol is not a layer one. It's built as an app chain. Or not as an app chain, my bad. It's built as a set of smart contracts on top of a layer one. We don't automatically inherit the delegated proof of stake setup of Tendermint, which I think is a good thing. I think there's actually a lot of problems with delegated proof of stake, mainly because it ties voting power to infrastructure, and that can get really messy. So because we don't have to worry about people, delegating their vote to validators in order to earn yield, we're making governance kind of this very optional thing. Like if you delegate your vote to someone else, you don't magically earn more yield, right? Compared to 99% of Cosmos governance right now, in order to earn yield, you have to stake with someone. We think that power distribution model is like really messed up. So that's our starting point. There's no extra yield for giving your vote to someone else. The second piece is there's going to be something called assemblies. We kind of took inspiration from Polkadot on this. The DAO is going to have enough things to do with managing Silk, with managing Treasury, with managing all the different primitives that are emerging, that the community will essentially, there'll be reoccurring elections to put people onto different multi-sig wallets. And then the multi-sig wallets have a set of specific white-listed actions that they're allowed to take. There's global limitations on how big of an action they can take. There's also essentially like an impeachment process as well. So you could think of it like, you got your judicial, your executive, et cetera. We kind of have that type of trying to set up similar, routine elections with checks and balances between them. But governance is very much late game. The white paper has outlined a lot of it, but it's definitely going to become a larger focal point as we finally get the products live. And there's a lot more to actually, govern.
All right, now we have Soy. Soy actually has a pretty interesting question. So, Soy, go on ahead, brother.
Hey, Carter. Thanks, Wabby. Thanks for letting me ask the question. Yeah, like you guys are coming at a couple of like really important problems for crypto in general, right? So it's like the concepts of privacy and decentralized stablecoins, and it's great to see those sort of issues being addressed. But I do have some sort of issues with Silk, particularly, to be honest with you. In the I want to know, like, how is it a stable coin? Like, my understanding of a stable coin, right, is like if I go down to the shop, ignore the fact that I don't have an American accent, but like, let's just pretend that I spend dollars, right? So like I go down to the shops, I buy things in dollars, but Silk is apparently it's pegged to like a basket of goods, right? So what is stable about a basket of goods?
100%. That's a good question. So the starting point, if you think about it, is every stable coin is a liability, right? And by a liability, I mean every single DAI essentially is the promise that you can either sell it on a secondary market for $1 worth of corresponding value, or you can pay off a loan and the loan will kind of be respected at that $1 rate. So Silk, in a similar sense, all of the different over collateralized models, all the different liquidations, all the different interest fees, the peg they're tracking is not a static peg. Instead, it's a slowly shifting peg based off of the value of all the different assets that are being tracked by the basket. And so the net result is, if let's say you're someone who's Eurocentric, right? If you hold Silk, you might be able to redeem more for more baseline euros than you had if you would have just held the euro. The example I like to give is, you can invest in Tesla or you can invest in the S&P 500, right? And people don't know it, but when you're holding just one currency, you're technically taking a position. And so all we're trying to pull off is aggregating the most stable assets essentially aggregate all the most stable assets and try to create a more stable index asset than the US dollar is the goal. And the way that's pulled off is the smart contracts are all tracking a very slowly shifting peg. And that means you might be losing value in relation to the US dollar or gaining value in relation to the US dollar.
Sure, but like, I mean, at the end of the day, like, we all sort of accept in 2023 the dollar is sort of like the de facto global currency, right? And that's why we have like the majority of stable coins are pegged to the US dollar.
Yeah, but see, I reject that premise. I agree, it's 100%. It makes up 90% of the global forex markets. It's of like in terms of settlement, it's a huge currency. But what happens if the US dollar loses that position? What happens if we do see a hyperinflationary environment? What happens to all of the dollar stablecoin liquidity in crypto and in DeFi? Suddenly, those markets get absolutely wrecked. And so I think it's prudent to have some builders focus on building assets that are more similar to a US dollar than to Bitcoin, right? Because Bitcoin solves the scarcity problem, but it doesn't necessarily solve the stability problem. And so with Silk, the weights can shift over time. Governance can add assets to it, they can remove assets to it. And it's the first ever stablecoin capable of like evolving over time in relation to the global markets. You could have Silk be 100% pegged to the US dollar and then 10 years later shift its basket and shift its composition.
Yeah, I mean, I agree with a lot of that, and it's like I'm asking the question because I do want to sort of get on board with this because I subscribe to a lot of what you say about the US dollar and all this kind of stuff like that. But like I say, I just have this trouble getting my head around it even being a stable coin. It feels more like a low volatility multi-asset fund in a way, and I'm not sure it's a stable coin. Like you said it yourself, it's got a floating peg, right? So how can something with a floating peg be stable?
Because when you compare its purchasing power to the US dollar over the past 40 years, it had less volatility and retained its purchasing power better. It functioned as a currency fundamentally better. It didn't necessarily give you higher returns at certain moments in history, but the promise is less volatility and more purchasing power retention over time.
Sure, and so on that basis, like, and the thing is, what I'm not trying to do is detract from the quality of the product. It's more like a definition sort of thing. So, like, I wouldn't want to hold all my money in dollars, right? Even though I spend dollars, I want to diversify and I want to try and outpace inflation. And it sounds like potentially like Shade might be able to do that. But ultimately, it feels like a diversified fund rather than a stable coin by definition is what I'm trying to get across.
I mean, I guess it
Even though that
depends.
might be a good thing.
Is your definition of a stable coin like you want to be able to have a one-to-one correspondence with some other sovereign asset? If that's your definition of a stable coin, then yes, Silk would not fall within that definition of a stable coin. But my view of a stable coin is some asset that has less volatility than like 99.9% of assets in the world. That would be my definition of a stable coin.
Yeah, I like that. I like that, and it's like a subjective thing, isn't it? I think it'd be fair to say that, you know, in the context of what people currently understand stable coins to be, it isn't a stable coin, but it might just be better than that.
Boom. But yeah, no, I appreciate the comments and I appreciate the pushback. It is interesting. What do you do when you build something and it's like what do you even name it? And so like maybe you're right. We actually it's funny you bring this up because like a year ago there was like intense debates over like, do you try to come up with a new word? And the answer was like, that's too radical to come up with a new word when everyone's already used to this concept of a stable coin. So actually, I think your premise is very true, and maybe we have a naming problem, and maybe we can work on that. I appreciate the feedback.
Well, it's not necessarily you that has the naming problem, is it? Like ultimately, like we all look at the dollar stable coins and we think of those as stable, but actually in the background we're getting hyperinflation and the value of those is actually deteriorating, and so there's not really anything stable about that, right? And
Right.
so I just find the whole concept quite interesting, and that like I say, I don't mean to sort of be negative. I'm just sort of trying to get to the bottom of exactly what it is because I want to understand it.
Right.
And so like yeah, like it doesn't for me. It doesn't fit with the convention of a stable coin, but like I say, it might actually be, you know, more suitable as a stable sort of store of value in real terms is kind of what I'm getting at.
It's also very strange because it bundles currencies together with commodities. Like that's when it's very difficult to have that type of Web3 product, right? So you're able to have it track a little bit of commodities to offset the inflation while still retaining the properties of like price stability that, you know, major global currencies have. So yeah, it's a extremely unique thing, and we're not sure how it's going to do. Like every step along the way, we've had people say that silk is like too radical and that like we're too early for this type of concept. But I've always held the position you'd much rather be too early to an idea. And I think that's kind of what it takes to innovate, is just to put something out there and have people look at it and be like, wow, that's compelling. But what the heck is it?
Yeah, I mean, I wouldn't even say that you're too early. I think the time is now for something like this, you know. But it's like trying to, for like, I don't know, idiots like me trying to work out what the hell it is. I'm just trying to, like, in my mind, put it in a box. I need to put stuff in boxes, you know. Anyway, we'll move on from the stablecoin thing. The other thing is, like, I've heard you talk about before about how, like, you will not rest until it is on like every exchange, and you know it's like massively distributed, right?
You've
'Cause
heard me on you've heard of Silk prior to this.
yeah, I've heard you for, like, I don't know, like a good couple of years or so now while you've been
Nice.
building the
Okay.
project. So yeah, like, I'm familiar with your work and stuff. So like, yeah, I know that you want like Silk to be like this massive thing, right? This like massively distributed. And so on that basis, like, how do you plan to do that and yet preserve privacy whilst doing that?
Yeah, so essentially once Silk leaves the L1 that we're on, it's a public asset, right? So you can bridge Silk to, 50 plus different IBC chains eventually. You could bring it back to Ethereum as an ERC20, you could bridge it to a layer 2. So we cannot make guarantees on Silk's privacy once people bring it back to a non-private environment. The good news is that all of those fundamental attributes that differentiate it from other stablecoins will still, of course, exist via arbitrage, via all those different economic levers. So I guess the real question is how do you scale up the layer 1 to be able to handle the throughput and demand on the commerce side once we get to the stage where we're bridging back to that Web 2 world. I think we have clearly at least 2 to 5 years of just time needing to prove that Silk is stable, like, or even a decade, right? Like the best friend of a stablecoin, assuming you've built it well, should be time. So once Silk has been live in the market, has proven that it can hold its peg, has proven that these attributes are valuable, I would definitely envision a world where there's a standalone constellation chain, maybe use interchain security to have side chains that are solely focused on Silk transactions, and while still preserving its privacy. So to your point, yes, very difficult to scale privacy to literally everyone in the world. It's a very challenging problem.
Cool, mate. I really appreciate like the good faith answers, to be honest with you. And what I'd say is that, to be honest with you, like, I think like as part of like my overall portfolio, I would definitely hold it. I just have sort of like these issues like with the classification of it and stuff. But like I say, appreciate the answers, and yeah, thanks for
And
that.
appreciate the question too. It's far more interesting when the questions are challenging, and I'll always like stand by that. Like it's a team that's, I think, has great ethics in a space that lacks a lot of that. So you can always count on us being truthful, even if it's us being like, yeah, the success was underwhelming. But the cool part is like we're on the cusp of actually getting this stuff out to the world, and so we're at peak optimism. I'm sure pessimism will bring us back, but appreciate the candid conversation.
No worries. Cheers.
So is this something that could actually be like deployed on Neutron as well? That's something that I'm wondering about.
Well, yeah. Like, I mean, without the sort of the privacy, like, we don't have the privacy features, obviously. But sure, if these guys wanted to deploy Silicon Shade, we could, and there's ways of building liquidity there, and we could definitely do that for sure.
Yeah, Silk's definitely going to be going interchain. There's multiple DEX partners that we're hoping to spin up pools elsewhere, and whatever we can do to make Silk accessible to the interchain and accessible to where the demand is, we're the community is excited to help facilitate that.
Cool. Well, if you think that I think we got main launch in about 4 weeks or so now. So yeah, if you ever feel like it'd be a good idea to launch on Neutron, then sure, give us a call.
100%. I will DM you right now because
Yo, I love seeing this, man. Devs connecting with one another, brother.
Love to see it.
Well, if anyone else has any questions for Shade Protocol, feel free to do so. Dow, if you have any statements, any thoughts on the conversation after your last statement, feel free to do so, brother.
Yeah, just want to say this was a great presentation. Glad to have you on stage. Definitely will look into Shade. Excited for you guys.
All right, man. So before we start wrapping up, are you able to discuss any upcoming developments or maybe even some features for Shade Protocol in the near future outside of trying to go interchain? I know what's really hot right now are people, trying to have some presence on Arbitrum. Although I do believe, even though like I guess like the vibes or energy is not there at the moment, I think optimism is going to start catching heat sometime second half of 24, first half of 25, once Coinbase starts building out base.
yeah, so our roadmap is the primary product launches are all happening in April, which is going to be, like I said, a year and a half dream come true. So we'll at least let the products breathe for at least a month to 2 months just to kind of see how the market reacts to the products and to be able to, integrate user feedback and improve the UI UX. There'll also be staking V2 launching, as well as D Shade, which is a staking derivative tied to Shade, the governance token. So those will be targeting post April, pretty soon after, which once again, it's probably more alpha leak than I should have said. And then governance enhancements shortly after that. Really going to be deepening out the analytics tied to all these DeFi products. People have an expectation to see, candlestick data for a DEX. They have certain standards for historical information that they're going to want, especially Silk 2. The analytics kind of showing its peg, how it's evolving over time, what it consists of. We're really working on getting those shipped as well alongside the main products. And then to be honest, we're going to be going into ghost mode. At least, I mean, the non front end developers are already going to essentially be 5 months heads down on the next project, which is titled Shade X, which is some of that Forex related work I was alluding to earlier. But in the interim, in terms of the BD side, still can be spread far and wide. So we'll definitely be looking into all of our options on that front. But in terms of things to look forward to, staking, governance, and Shade X, whatever that consists of.
Awesome, man. And where can people learn more about up to date stuff about what Shade Protocol is doing, and also how can the community contribute to the overall like awareness of what you guys are building?
Totally. So be sure to on the Shade Protocol Twitter account, be sure to give us a follow. Also join the Telegram and the Discord. The Discord has very active discussions on the economics and the products overall. So definitely get involved there. You can also find out more by going to shadeprotocol.io. If you scroll all the way down to the bottom, we have links to our documentation if you really want to deep dive. And there's also the Shade Protocol YouTube account, has quite a bit of really good Twitter space content on there. So would definitely follow Shade Protocol on YouTube. And yeah, the team is very, very available in the various channels. So if you have any questions, feel free to reach out. We're more than happy to answer. And at the end of the day, it's an open source project. And so if any of the leadership, disappears, we're counting on kind of this global community to keep pushing forward. And there's a lot of opportunities to be had, and it's only possible via the kind of energy of the community to make private DeFi globally accessible.
Awesome, man. So, with that being said, if you guys enjoy this conversation, feel free to follow us here at Because Bitcoin and turn on bell notifications when we go live with these spaces. I want to take the time to thank the Shade Protocol individuals for coming on here and talking some shop, and for getting to share what they're all about and what they have in the roadmap and all those things. And thank you to our speaker panel, Dow Chemist, as always, every Tuesday and Thursday, and also Feel Pain and Soy from Neutron. If you guys want to catch a replay of the space, you can catch it up on our YouTube channel. And tomorrow, I'll most likely be taking a break, but you can catch us for our weekly Bear Chain Spaces on Saturday. We're going to be having Baby Bear Finance, Bear Ammonium. The Bear Decks individuals might come, but we might host them on a separate space. And a few other projects that I'd rather just not say until like the day of to kind of keep it a surprise or whatever. But yeah, and next week we have let me see who we have. Give me a sec, guys. We have Chronosphy. We have our mega spaces with Cosmos featuring a variety of Cosmos projects and devs and enthusiasts being featured. We'll also have the ZK Casino people, and of course our Saturday Bear spaces. And further down in April, we'll be hosting Celestia, Egan Layer, Statter Finance, Frax, and Redacted Butterfly. So look forward to that. Thank you all so much for supporting us here at Because Bitcoin, and have a good rest of your Thursday night. So peace out, guys. Take care. God bless you.
Take care. Thanks, guys.
Later, guys.
Have a good one, guys. Thank you.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, you say, I'm going to trust the statisticians. You would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. It can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.